An interim report of a landmark inquiry into Australia's banking sector has uncovered widespread abuse and misconduct in financial institutions. The Royal Commission's interim findings, which the government has called a scathing assessment, also condemned corporate regulators for being too soft on the banking sector. The inquiry has exposed widespread wrongdoing in the industry this year, driving down share prices and trashing the reputations of some of the country's biggest companies. The Commission will release its final report in February. Well, let's get more on this now with Steve Keane in Amsterdam. He's an economics professor at Kingston University in the UK. Thank you so much for your time. Firstly, it would come as no surprise, some of these findings, for those of us who are aware of Australia's banking sector, but just to remind some of our viewers that what some of the findings included, some dodgy financial advice from many financial advisors. We have salespeople preying on the disadvantaged and Australia's Indigenous population to offload funeral insurance fees for no service, as it's been called. I mean, there's a whole array of wrongdoings listed in this interim report. What can we expect in the final report?
Well, I think it's going to be an interim report itself when it comes out as a final one, because they've only, I think, interviewed about 17 individual victims of all the various financial frauds that have occurred. And of course, your summary is extremely generous to the banks because, for example, as you and I both know, they were charging dead people for financial advice and taking money out of their estates. An incredible range of fraudulent behaviour, but my favourite has been the fact that they've been pretending that people can pay all of their income above the poverty line for servicing their mortgages, when the poverty line is defined at what 2 pensioners can live on, and this was families of 4. So there's been an outrageous increase in the level of household debt, courtesy of all the fraud and malfeasance that's occurred in the banking sector.
Now, this Royal Commission into the banking sector, it was resisted for so long by those in power, the centre-right Liberal Party, and it wasn't until pressure from sectors of the community as well as the political opposition there that brought it to a head. What can we expect from this inquiry when all is said and done? Do you expect there to be real change among Australia's financial sector?
Only if somebody as tough as the Royal Commissioner himself is appointed to run something like ASIC or APRA, because they've been completely toothless tigers. And of course, the ironic thing about this inquiry being called is that the banks resisted it. The Liberal Party opposed it all the way through for about 40 or so votes in Parliament. Finally, the Royal Commission was held when the banks themselves said, let's have a commission and clear the air. They themselves had no idea of how fraudulent their own internal behaviour had been. So they'll go back to behaving the same way unless somebody really tough gets put inside there, and frankly, unless some of the people who've been exposed by this end up going to jail.
In the wake of the 2008 financial crisis, Australia's banking sector was actually applauded for withstanding some of the downturns and collapses that were seen around the world in countries like America. Obviously, the tables have turned now, but let's compare Australia's banks to those around the world. I mean, objectively speaking, does Australia have a good, robust banking sector?
No. No, it has probably the most fragile banking sector on the planet, and for the same reason that America had a fragile one back in 2008 and Japan had one back in 1990. They created far too much debt because they profit by creating debt. That levered up house prices, creating an artificial bubble. Their asset base is now entirely still reliant upon the household sector being able to finance debts that they can only finance if house prices continue rising, and they're now falling. So back in 1990, one of the banks almost went under back with a housing bubble back then. That was Westpac. I strongly expect one or two of the banks to either fail or be forced into a humiliating rescue when the house price bubble goes into reverse and when they can no longer profit by creating more and more debt for the household sector.
Yes, and before we let you go, in terms of remedies to some of these wrongdoings that were exposed in the interim report, I mean, what would you like to see? You mentioned that the corporate regulators were essentially toothless tigers. Does there need to be another body, I guess, set up in order to address grievances?
No, in fact, the Commissioner Hayne has said the opposite of that. He said there's been another layer of rules will just give them other things, other obstacles to evade with further legal and illegal activities. I would simply prevent banks from lending based on the so-called income of the borrower,
yes,
and make them lend instead on the income of the asset being purchased. And that would limit the level of leverage against income, which has become astronomical in Australia's case. So stop letting them lend on the basis of asset prices, which lending itself causes to rise.
OK, Professor Steve Keane in Amsterdam, thank you as always.